So let us take a look at our debtors collection schedule. But before that, just some more basic theory. Remember, guys, I love this idea of holistic education. So this is not an entire budgeting question. It is debtors collection schedule, but these are two interesting questions, just so you guys have a better grip of the cash budget, what goes in and what doesn't, as well as some level of understanding of the projected income statement too. So 6.1.1, identify 2 items that the bookkeeper recorded incorrectly in the cash budget. So if we take a look, this is our cash budget over here. Feel free to pause the video and have a look. So cash budgets can only be cash amounts. Discount received, it's not like they're actually giving us money when we receive a discount. The same goes for depreciation. It's not like, there's like a depreciation guy that comes around every month like, hey, your vehicle has depreciated by 15%, diminishing balance method. Give me your money. Just give me my money. It's not like that. It really isn't. It's not a cash amount. Same with bad debts. It's not like when a debtor doesn't pay you, you have to pay them. A bad debt is when a debtor, someone who owes you money, is unable to make that payment. So you're not giving them money. It's a loss because we're never going to get that money back. So these aren't actually cash amounts. So discount receive, bad debts, and depreciation. Verstaan? You understand? Okay, next one. Identify 2 items in the cash budget that would not appear in the projected income statement. So let's just use a different color. So we're doing 6.2 now. We're using a blue. Cash from debtors, big no-no. This fixed deposit matures amount, payments to creditors, and repayment of the loan. So we do not factor in anything here regarding our debtors and our creditors. So no cash received from debtors, no payments to our creditors, and also regarding our non-current assets and liabilities. So a non-current asset would be our fixed deposit maturing, and our non-current liability would be the repayment of our loan. I know that would fall under that current liability short-term portion of loan amount, but those are the things that we do not factor in. So debtors plus creditors and anything that is non-current as well. 6.2, complete the debtors collection schedule for October 2016. Sorry, just wanted to clean my screen with a bit of Omo. So things are just a bit easier to read. So completed for October 2016. So we need to fill in this column here as well as this one here. Yeah, but also it's important to note that October can never affect September because September is before October. So we just leave this blank. Don't even plug in a 0. Let's just quickly get our credit sales amount here. Feel free to pause the video. We're trying to calculate our October credit sales amount. So if you just take a look at sales, information B, sales are expected to increase by 15% in October 2016. So this 172,800, we multiply it by 1,15 or 115%. I know some of you would just prefer to multiply it by 15%, so 172,800 times 15%, and you add that amount back to the 172,800. Look, whatever floats your boat, my friend. I like to do it all in one step. I think it's easier, it's more efficient, it minimizes the chance of error, and that is how I like to do accounting and math. So, as long as you get that answer. Also, if you take a look at that big fat green bracket that I've made, that's the key to nailing down this question. And my first question to you is, does July affect October? So that's going to be 1, 2, 3 months. Does July affect October? Yes, it definitely does, because 3% is written off as irrecoverable. That's screaming to you that we have bad debts here. But the answer is also no. You are South African. You are no, but no, it doesn't. Because this is our debtors collection schedule. It's money that we're receiving. It doesn't include anything regarding bad debts. So the answer is no. July does affect October in terms of bad debts, but not in terms of our debtors collection schedule. Whatever credit sales we made in July, we're not going to receive anything in October. So we also leave this blank. Or you could plug in a 0 if you like. I just prefer to leave it blank. So we need answers here. 1, 2, and 3. Okay, let's just use another color now for these 3 October amounts. So we need to ask ourselves, how does August affect October? How does September affect October? And how does October itself affect October? So 50% is collected in the month of the sale. That would refer to October, affecting October. 40% is collected in the month following the month of the sale. I know, not the most attractive English, but that would relate to September. So it's just going to be 1 month after. So here, same month. Oh, that E is looking rough. Sorry. This is going to be 1 month after. And 7% is collected 2 months after the sale. Okay, so let's do some calculations here. Okay, just clean my screen one more time. So our credit sales amount, this 151,200, we're going to multiply it by 7%, and we get 10,584. This 172,800, we're going to multiply that by 40%, or 0.4. Remember, you can use decimals. I prefer to use decimals. It's the way I was taught in school, and it's still what I feel comfortable using, but maybe your teacher prefers you guys to use the percentage button on your Casio calculator. Either or is fine, as long as you get these answers. Okay, pick a method, pick decimals, pick percentages, whatever makes you feel more comfortable, whatever you're happier with, stick with that method. Asableef, please. So 172,800 times 40%, or 0.4, is equal to 69, like Tekashi. It's a terrible joke if you know Tekashi 69, that rapper. And this October amount we've already calculated. We are just going to multiply that by 50%, because that is the month of the sale. And that gives us a grand total of 99,360. If we add these three amounts together, we get 179,064. And that is the question.